Good morning. I'm Joel Williams, Director of Wholesale Fuels for Sprague Energy. Welcome to Sprague's Refined Products Review, where we discuss what's moving the market, giving you insight into what we're seeing every day. Today is Wednesday, April 23rd. In this week's review, we'll be focusing on how market volatility is impacting forward offers. This is a timely topic, as many of you have already started to layer in forwards, or at least starting to think about it. The three primary areas of volatility we will be focusing on today are 1, the flat price, 2, tariffs, and 3, bioblends. We will start with the flat price, as that is the main driver of prices. The flat price is determined by the underlying futures prices as traded in the commodity markets. These prices are driven by both speculators as well as the fundamentals of supply and demand. Recently, we saw the underlying future prices of our popular October to April heat curve drop from around 228 per gallon on April 2nd to a low of just 201 per gallon on April 8th. This drop was likely driven by the Liberation Day tariffs, which speculators forecasted would create a destruction in demand due to the possibility of a global recession. On top of that, OPEC announced increased production, which created a fundamental increase in supply, further driving prices down. Today, that same heat curve sits at about 207. So are we at the bottom, you may ask? Well, no one really knows. But I will say this, that barring a total demand destruction like we saw with COVID, we are nearing the floor. $60 crude is often cited as the stress-inducing point for production, where oil producers scale back activity, which ultimately stops the price slide by bringing the markets back into equilibrium. Crude prices today, well, they sit just above that point in the mid to low 60s. As for the ceiling, though, well, that is a lot less defined. Could prices go up by $1 or even more? There's absolutely a possibility with all the global instability we are seeing out there. Trump could pull back on his trade wars. Russia could escalate its conflict with the Ukraine or even NATO. And the Middle East continues to be a powder keg that could go off at any time. So when should you buy? Well, that is easy. You should buy when prices hit a level that you think you can sell at. Go back to back. Let us take the risk for you. Remember, attempting to buy the absolute low is like trying to catch a falling knife. Be very careful. The next topic I will hit on is tariffs. This is a reminder that in periods of tariffs, Sprague will supply its facilities from New York Harbor with tariff-free product to protect our customers from having to take the hit. But this does not mean that tariffs will not impact the price of your forwards. We all know that tariffs are likely here to stay, and when Trump decides to tariff refined product imports, which he has already done, this instantly will impact the supply of those products coming into New York Harbor from other countries. This drop in supply will drive prices up both in the spot markets and in the futures markets. The increased risk of this happening means that forward prices this year will need to include a risk premium in order to protect suppliers from the increased cost that these tariffs will bring. So yes, tariffs are inherently included in the price you pay, which is why there is no reason to charge tariffs on top of the already prevailing New York Harbor prices. Remember that buying a forward from Sprague includes the insurance that you will not be line item for tariffs unexpectedly. And while that insurance includes a risk premium measured in pennies per gallon, it thankfully does not have a tariff risk that is measured in quarters per gallon. The last topic I will hit on is bioblends for our customers in markets where B10 and B20 will soon become mandated. Sprague forward prices currently reflect those new blends, so buy the already mandated B5 and B10 blends in your markets, and those contracts will be switched over to the new blends once they go into effect. But the real reason I wanted to talk to you about bio today is the volatility in that market. Due to legislation changes, bio went from a cost of 20 cents less than heating oil in January of 2024 to 50 cents above heating oil in January 2025. That is a 7-cent per gallon swing on a B10 blend. At this point, there's no indication that the current administration has any plans to bring back the blender's tax credit to bio. So it would seem that the days of bio costing less than heating oil are behind us, and that next winter will look a lot like this winter, with bio supply being very tight and price being very high in the plus 50 or more range, as these high prices will be needed to attract the supply to the market during the peak demand periods of winter. Remember, when buying your bioblend forwards for next year, go with a supplier like Sprague that will meet whatever blend rates are mandated. And also go with a supplier you trust to be able to supply all your bio needs and make good on their contracts. Sprague has been a leader in biofuels and will continue to leverage our expertise in this area to keep you informed and supplied when you need it most. Well, that's all I have for this week. It was a lot of topics to cover, so please, if you have any questions, feel free to reach out to me or your sales rep with anything you want clarification on. Remember, Sprague is here to be your information partner in this ever-changing business environment. Be sure to mark your calendars for our next special feature, an overview of Sprague's marine fuel offerings, releasing this Friday, April 25th. That's all for today. Thanks for joining us. We'll be back next Wednesday with another refined products review. Refine your insight, fuel your success.